The weekly jobless claims came in today for the week ending December 28th, and it was lower than the anticipated figure here. 211,000 initial claims filed here. That was actually a decrease of about 9,000 versus the prior week's report. Ultimately, as you kind of look at the trend and assess the trend that we're getting in jobless claims, it continues to kind of show that there is still strength right now in the labor market. Where do you anticipate that we'll continue to see some of that strength play out, either on a sector basis or even on a wage basis, perhaps, which is more critical for the households that we're looking across and seeing where the strength of the consumer might prevail?
Sure. Yeah. No. Absolutely. I think a mentor of mine in the past always cautioned me: don't try to predict employment with an unemployment statistic, right? So. Especially now, it seems like there's this relatively wide divide between demand for labor, which we can see in job openings and things like that, or a slower pace of hiring in sectors outside of healthcare and education and whatnot, versus the layoff rate in the JOLTS data or claims, which show that there haven't been large swaths of people kind of being indiscriminately laid off, right? That data also fails to capture the decline in the work week that we've seen in the last couple of months as well. It shows, I think, that businesses are very cautious about letting people go and thus not having access to them when things turn around. That may change. We now are through the election. We're through presumably the biggest sort of point of uncertainty for the next year or two. And as I kind of hinted at before, I think that the area to watch is one that economic data, unfortunately, doesn't do a great job of capturing, but is very small startups and mom and pop businesses and that sort of thing. Small businesses, I'm talking like less than 50 employees, have generally been the major engine of job growth, the easiest access for people building wealth through owning those businesses. And we've had a really pretty tough time for those businesses in the last couple of years. Obviously you had COVID with the shutdown of main streets everywhere and that sort of thing. But in the sort of very quick recovery that we had, a lot of businesses maybe couldn't get going in time to take advantage of low interest rates, or more problematic, they're generally funded at floating rate, right? Yeah. So now they'll probably enjoy a slightly lower interest rate from the banks, I would think, plus more of a pro-growth environment and maybe tax cuts that'll eventually let those business owners retain more of their wealth as time goes on as well. But obviously, I mentioned a lot of things that we're anticipating changing with the new administration. We don't know for sure, but I think that's an area to watch. Yeah,
not all out wait and see, but certainly waiting and monitoring to see how many of the campaign promises come to fruition as well. Right. Thomas, great to see you. Thanks so much for taking the time.
Likewise, thank you.
Absolutely.